Welcome to the Capital News. I am your host, Alex Kreitis. Today is August 1st, 2019. Thank you so much for joining me. Already August. I can't believe it. It's crazy. So today we're going to focus on Tariff Man. Of course, we're talking about President Donald J. Trump because he took to Twitter. He had a little press conference out on the lawn at the White House to discuss his most recent actions regarding the U.S.-China trade war, and it is now going to be escalating another step further. Our U.S. delegation, trade delegation, pretty much Lighthizer and Mnuchin, came back from meeting the Chinese in Shanghai for a luncheon. That's all it was. It was a complete waste of time, a complete waste of money, but that's par for course with our politicians, our bureaucracy. Nothing was achieved, but evidently they must have said, it was a waste of time, Mr. President, just a complete waste of time. I could have told you this, and I don't have any insider information. And I don't spend most of my hours of my day investigating, researching this matter. This is just a public information. This is just applying some common sense as to what has transpired over the course of the past year, almost year and a half. So, Tariff Man Donald Trump is increasing tariffs, or he is now going to levy 10% tariffs on $300 billion worth of Chinese goods coming in to the United States. So this is an additional $300 billion worth of goods. Again, 10% tariff. This is not an increase on the 25% tariffs on, I believe it's $250 billion. So this is a completely new set of tariffs on a new set of goods. The question remains now, how will China respond? These tariffs are set to go into effect on September 1st. Why September 1st? Because the president is giving some time to allow for basically the new shipment of goods to hit the waters to make its way over to the U.S. So anything that's already on the waters, anything that's already on its way here to the U.S. is not going to be subject, but come September 1st, all of those goods or whatever the president and his trade delegation are going to decide are going to be subject to that increase of 10% on those goods. This is an escalation. The stock market, the U.S. stock market, was up across the board pretty much 1% or greater than 1% at its high points today. And on the dime, on the turn of a dime, because of this tweet from Donald Trump, they reversed course. And most of the major indices were south of 1% for a little bit. So the S&P lost 27 points, a decline of 0.9%. The Dow lost 281 points, a decline of 1%. The Nasdaq lost 64 points, a decline of 0.8%. The Russell 2000, the small cap index, lost 24 points, representing a loss of 1.5% for the day. The Dow Jones transports got whacked. They're down 2.5% for the day. And the New York Stock Exchange lost 1%. And again, the major indices were all north of 1% or trading around 1% throughout most of the day until Donald Trump took to Twitter. So again, this is very fitting with our volatility model, which we're starting to mention here on a near daily basis. We were talking about it yesterday because yesterday we had the news from the Federal Reserve that they were going to cut interest rates, that they did cut interest rates 25 basis points, and that they were going to end their runoff of their balance sheet known as quantitative tightening. And that was the thing that we said you had to pay attention to. In our opinion, more importantly than just if they were going to cut interest rates or not, which they telegraphed to the world for months that they were going to be doing so. It was the quantitative tightening that you had to pay attention to, because from our analysis and from just simply reading what the Federal Reserve, some of their own economists were saying, if you have quantitative tightening, do those effects actually act and serve as an interest rate hike? Well, we believe that they do from reading that research. And I also believe that this was in their decision to end the runoff, to end quantitative tightening, because they too believe it, although they dismissed the question when it was asked by one of the reporters during Chairman Powell's press conference following the decision, again in regards to quantitative tightening. Yeah, we're just done with it. We're just going to end it early. It was scheduled to be over in September of this year, but we're just going to get it done out of the way. Just dismissed it because he didn't want to come out and tell you guys the truth, what they know, what they're looking at. They might have been telling us for a while that interest rates have been sitting at 2.25%, 2.5%, but no, that's not true, because once you take into consideration the effects of quantitative tightening, it's really a de facto rate of probably 3.25%, 3.5%, if not a little bit more than that. But if they told that, if they announced that and admitted that to the markets, we'd be down several percentage points over the past couple of days, believe me. Believe me, because it just would have thrown a shockwave throughout the system, because most people don't pay attention to this. So that's that. And we're going to go all around the world, too, because I just want to stress to you guys the abuse of power that this is, the amount of power and control that exists within a couple individuals. Yesterday it was Jerome Powell. Today it's President Trump making statements, going on Twitter, getting in front of the press. I mean, a few paragraphs of information, and you move trillions and trillions of dollars worth of assets. This is too much power. I hope that's starting to sink in. You want to talk about free market capitalism, and then you want to point and look and listen to two people move trillions of dollars worth of assets. There's no way that this is free market capitalism. No way. Oil at its low part today, because it too reversed, was down 8% at its low. 8%. We have WTI now trading at $54.90 a barrel. Yesterday was almost at $58. We have Brent crude trading at $61.90 a barrel. Yesterday, it was at $64.25. Gold and silver, same thing. There was a lot of whipsawing movement throughout the financial markets. Gold is now trading at $1,428 an ounce. Silver is trading at $16.17 an ounce. Uncle Sam's U.S. 10-year Treasury got whacked today, losing 6.25%. and is now yielding 1.89%. So we have a one handle. We had a two handle for quite a while, 2.06, 2.07, whatever it was. We told you, do not be surprised if the 10-year goes down to yield zero. Zero. I am actually in agreement with some of the other market analysts out there who are saying that it is going to hit zero. I am not going to be surprised, because this is not a one-and-done rate cut. It's not. The Federal Reserve is going to continue to cut interest rates. It might not do it every meeting, but they are going to begin a cycle here of easing. Make no mistake about it. If you haven't taken the time yet, go to thecapitalnews.com or our YouTube channel under the same name, The Capital News, and look at our video presentation, Are Central Banks Trapped? Because we show the balance sheet. We show you a visual explanation of quantitative easing, the effects of what the Federal Reserve has been doing for a decade, the effects of the European Central Bank, and the effects of the Bank of Japan. Just to pull a few out. I mean, those are the powerhouse central banks of the world. This is unsustainable. It's a flawed economic policy, and it's a fraud. It is a fraud. Call it for what it is. This was a reflation attempt to increase the price, and I emphasize price, not value, but the price of financial assets, because everybody was in a panic 10 years ago. Fundamentally, the system should have been allowed to rid itself of all of the waste, all of the abuses, all of the malinvestment. But everybody threw a hissy fit. Everybody was in panic. And so you have central bankers coming to the rescue to reflate. And this is what they said. These are their words. This is what they wanted to do. They wanted to reflate financial asset prices in the hopes that this would create a wealth effect, more commonly referred to as trickle-down effect, trickle-down economics, which really doesn't work, ladies and gentlemen, because you're basically counting on the top 1, 2, 5, 10% of the country's population to support the remaining population. I mean, that's just not going to happen. It's just not going to happen. And it didn't happen. That's why we've had stagnant growth for the past 10 years. That's all it is. Obama's administration was a disaster. Donald Trump's right now, he ain't really faring much too better. I mean, if you were a Obama guy, if that's who you voted for, if he was your man, you loved him. He can still not do any wrong. Donald Trump. If you voted for Donald Trump, he's your man. He can do no wrong. Where are my fiscal conservatives? Because we had the Senate now voting for this debt ceiling spending that is just going to allow us to have trillion-dollar deficits for the next couple of years, with no end in sight after that too, ladies and gentlemen. Because within a couple of years, I mean, we are already at the longest expansion in modern history here. If you even want to call this an expansion, I mean, I guess maybe technically it is. But do you really feel that much better off? I mean, there are still people who have not fully recovered from the Great Recession a decade ago. And now we're about to hit another one. And I think it could be even worse. It probably will be, because we did not correct the system 10 years ago. We just glossed over everything. We just printed money over everything. We counterfeited money. And all that did was reflated asset prices. Who owns financial assets in great quantities? The upper echelons of the income brackets. I am not about class warfare here. Those of you who've been following this podcast know this. We're free market capitalists here. But this ain't free market capitalism when you're printing money and directly putting it into financial assets. That was their objective. This is what they said. They wanted to reflate asset prices, and that's exactly what they did the world over. That's why you have the rise of populism and nationalism the world over. This is why you have such income inequality the world over. This is where it comes from. This is why you end the Federal Reserve. This is why you abolish the federal income tax. You hear no candidate on either side saying this. You want to solve problems? That's what you start with. Otherwise, we're going to be back here in the next 2 years, the next 4-year political cycle, the next 6-year political cycle, and on and on and on. And it's going to be the same news. It's going to be the same topics. It's going to be different faces and different degrees of a problem. Strike at the root. And the Fed abolish the federal income tax. That will start with it, believe me when I tell you. So we also have the volatility index, the VIX, up nearly 11% today. Yesterday it was up 16%. Today up 11%. Now trading at $17.87. So volatility is back in the fold. We are not surprised. We'll keep you posted as what happens. But I want to go all around the world here quickly again, just to simply emphasize the effects of what one person can do when they take to Twitter to say we're going to continue to put in an increase of tariffs on Chinese goods. So we have the British markets right now in early morning futures trading. They are down 1%. We have the German markets down 0.9% right now. The French markets are down 0.8. The Italian markets are down 0.1%. And the Spanish markets are down 0.5% as we speak right now. Of course, this is the future markets. Anything could change, but I'm not staying up till 4 o'clock in the morning when these markets open. These are the futures. We'll see what happens. Anything can change, but I would imagine that it's probably going to stay somewhere in this realm throughout the day because we continue to see a further deterioration of the fundamental economic numbers coming out of the Eurozone. Not good, believe me when I tell you. We have some of the Asian markets where, of course, at the time of this podcast right now, are open. They are trading. We have the Japanese stock market down 519 points, down 2.4%. We have the Chinese markets down 1.7%. We have the Indian markets down 1.25%. And we have the South Korean markets, which I think this is a big ticket that we have to monitor closely. I think this is akin to the Dow Jones transport, sort of the Dow theory. South Korea is a powerhouse exporter. I think it gives a good barometer for international trade, as does the Japanese markets, but I think a little bit more so South Korea. I'm in agreement with some market commentators and analysts on that. And right now, they are down 0.9%, trading at a level which we have not seen on the South Korean exchange since late last year, early 2019, which I don't have to remind you folks was not a good time for equities. We have the Hong Kong markets down nearly 700 points, representing a decline of 2.5% as well. So, all of this on the back of a tweet. All of this on the back of a few statements that we are going to increase tariffs on China. You know, I was texting a couple buddies today. Actually, one of them, group text, was basically just calling out what's going on here with these tariffs. I mean, the timing is awful, and, the timing is never going to be right for this. But, we're spread across the country. And my response to it was like, yeah, the timing's never great, but what's China going to do? What's their response going to be? Because we're only seeing half of the equation right now, right? It's us versus China. That's the whole story. So what's China going to do? We just threw a left hook. Are they going to counter with an uppercut, or are they just going to stick and move? Or are they just going to take it? We're going to find out. But that was my response. And then one of my other buddies who's in the Midwest said, what's the Midwest going to do? What's their response going to do? Forget China. What's the Midwest of this country going to do? Which is a good question. It's very valid, because we continue to see deterioration from the Chicago PMIs and the Chicago Federal Reserve's index. It's just slowing down. You have a huge manufacturing base in the Midwest region. You have a lot of farmers, obviously, in the Midwest. They are continuing to get bailed out. They were supposed to be winning. These trade wars were supposed to be easy to win, easy to conclude. We're now over, I believe, a year in these negotiations, talks, trade war escalation, truce, whatever you want to call it, with no end in sight. And now this is a further escalation. And what will the Chinese do? And what will the Midwest do? Because Donald Trump, hey, he won Pennsylvania, he won the state of Ohio, he won Michigan, he won Wisconsin. Will he get these people again? Because he did this not just off of the back of his base, not just on the back of Republicans, but a lot of Democrats, a lot of people who voted for Barack Obama in these states crossed the line, if you will, to vote for Donald Trump. Will they do so again in 2020? Now, the election is a lifetime away in politics, especially in the environment in which we live, so anything can happen. But if it continues on this course, I think a lot of people who voted, who crossed the line, who basically said, you know what, we cannot have a continuation of the system. We don't necessarily know how good this guy's going to do, but you know what, we got to take the gamble. We're Americans, we gamble, we take risks. Let's see if this guy can do it. Maybe he'll shake up the system. That's what we need. The American people were giving, the one-finger salute to the man, to the system. You know what? Whether or not they loved Donald Trump, it was a distaste and a disdain for the system that a decade on from the great financial crisis, and people are still suffering. There's still no real economic growth. And people feel this. They know. These people live in the real world. They know. They're not on the wings of this country. They're not in Silicon Valley making, millions of dollars a year. They're not on Wall Street making millions of dollars a year. They're not in Washington, D.C. as a defense contractor, as a lobbyist making millions of dollars a year. They are the heart and soul of the country, and they know that they live paycheck to paycheck. They know that their neighbors are living paycheck to paycheck. They know that it's difficult for their kids to get into school and to afford it. They got medical bills to pay that are piling up. They gave the guy a chance. They're giving Donald Trump a chance. Will they do it again? Because the president is attempting to make good on his word on these things, trying to negotiate and renegotiate trade deals, trying to take China head on. But I do not think that this was the best course of action, to take China on head on. The problem is Donald Trump also views many of our allies who really would have put a lot of weight on China with us. He views them as an even bigger problem. And of course, I'm talking about the European Union. So I believe that's why Donald Trump didn't say, hey, European Union, let's get together, let's coordinate this, and let's put the weight of the two largest economies in the world, the United States and the European Union. Let's team up on China and say, hey, look, this isn't us really, bullying you or picking on you, but look, you've done X, Y, Z. Knock it off. You want to get into the real world here? You want to open up your markets? Let's do it. And then you can have a conversation and you can work out the details. But Donald Trump wasn't going to do that, I don't believe, because he thinks, and he says this, that the European Union treats the United States even worse than China does. So right now we have sort of a moratorium on the European side of things. Not until October, I believe, is that going to be reviewed, and that's only a couple of months away. And don't forget, Halloween, trick or treat, is the Brexit deadline. So now you're going to have a Brexit deadline. No Brexit, no deal Brexit. What's going to happen there? And you're likely to have Tariff Man going after the European Union with tariffs on them. And what's going to transpire with U.S.-China trade talks? because I would have to imagine that the Chinese are going to retaliate in some way, shape, or form. How quickly they do it is going to be anybody's guess, but we're going to soon find out. And the other thing I have to say is because Donald Trump continues to come out and say that the Chinese economy is basically in the toilet. It's in the gutter. GDP is at a 27-year low, which it is. And of course, we don't believe the Chinese numbers either. I'm not here to defend or support China. I'm here to support and defend the United States of America. But I'm not going to give the President of the United States, no matter who he is, whether I voted for him or not, a free pass. So you have Donald Trump coming out and saying, look, China, their economy's terrible. We're the best. They're terrible. Our policies, these tariffs are hurting them. They're paying us billions of dollars. They're just funding our U.S. Treasury, which of course is not true, ladies and gentlemen. Importers, the companies in this country who are purchasing these goods are paying that tax. And they're either eating all of it, so it's squeezing their margins, or they're passing it on to us, the consumer, or some combination thereof. That's how they work. So the president continues to virtually lie to you. So he's either lying or he's incompetent on how they work. It's one of the two. Pick it. Neither is good or acceptable in my position, or in my opinion, but that's what he says and that's what he does. He continues to say that President Xi wants to make a deal, that they need to make a deal, that they want to make a deal. So now I simply say, take a moment and put yourself in the shoes of President Xi and his delegation, his trade delegation. What are you going to do now? Are you going to come to the trade negotiation table? Because don't you think it's going to make you look weak? Donald Trump is calling us out. He's saying our economy's weak. He's saying we want to make a deal. We need to make a deal. And he's placing more and more tariffs on our exports to the United States. Wouldn't that make him look weak? Do you think President Xi is going to come back to the negotiating table now? So again, look at it from the other side. Do you think if the Chinese were doing this to us, would Donald Trump go to the negotiating table? Do you think he would go there in a position of weakness? That's how it would look. Do you think if President Xi was saying the exact same thing that Donald Trump says? Our policies are putting the U.S. economy in the gutter. Donald Trump needs to make a deal. He wants to make a deal. We're going to increase more tariffs on U.S. goods coming into China. Do you think Donald Trump would say, sign me up, boys. Let's fly over to Beijing and hatch this one out? No, he wouldn't do it, not in a million years. So you expect President Xi and company to do so? Not at all. It's very important, ladies and gentlemen. I ask you to please take the time in whatever we're talking about or whatever is important to you. Political, geopolitical, something personal, economic, doesn't make any difference. Please do your best to look at it from the other person's perspective. I don't care what we're talking about. Whether we're talking about Venezuela, put yourself in the position of the Venezuelans. Put yourself in the position of President Maduro down in Venezuela. Put yourself in the shoes of the Iranian leadership. Put yourself in the shoes of President Xi, of the Japanese, of the South Koreans, of the North Koreans, of the European Union. Because if you only look at it from our perspective or from the perspective of Donald Trump and company, whether you're a Republican, Democrat, I don't care who you're picking. This is just broadly speaking. If you're only looking at it from one side, you only have 50% of the equation. And how are you going to solve the equation and come to the right solution if you're only looking at half of the equation? You need to look at all sides of it. So I stress this, and that's what I try to do here as part of my analysis in everything that I do. That's why I'm, more than willing to watch 20 lunatics on the Democrat stage trying to become the next president of the United States. So help us God, they don't, but they might. They might, because we have a president of the United States who is attempting to make good on his word on some things, and on others, it's just not even close. It's not even close. We have no fiscal conservatives left. We have a debt ceiling that's just been increased. Nobody cares, and the president is applauding it. He's applauding it. How is he draining the swamp if he's giving the swamp an additional $2 trillion in debt to play with that they will waste, mismanage, and abuse? That's not draining the swamp at all. That's giving them free rein. You got Goldman Sachs in the White House. You got Boeing, Lockheed Martin. You got Raytheon. Everybody's running around. I mean, you don't even know who's in there. This isn't draining the swamp. I can guarantee you that. It's not even draining the kiddie pool, as I like to say here. So these are all the things you have to pay attention to. Look at it from the other perspective. Try to get a common view. What are people thinking? What are they doing? Because that's going to allow you to think outside of your bubble, because we all get put into our own little bubbles. It happens. It's just human nature. It's part of human nature. But you got to do your best as an exercise to remove yourself from being a loyalist to your party, to your team, to your guy, whether that's Obama, Trump, Bush, Clinton, anybody. Get out of it. Get out of it and look at things objectively. Because that's the only way we're going to come together as a country to solve the problems that we face. Because right now, it's all divisive. It's all finger-pointing. It's all name-calling. Nothing gets done. And we have real issues that need to be decided on. And they talk about them in the Democratic debates. Donald Trump talks about them. But nothing gets done. Not a damn thing. And it's a true shame. And right now, again, we have, on this topic of today's discussion, we have a couple people who move financial markets from tweets and from press conferences. Again, this is not free market capitalism. I don't know what it is. It's some sort of financial dictatorship is what it is. I mean, this is the coming of age of central banks, because all they're doing is printing more and more money and doing it to buy real assets that generate cash flow. So look at it from this perspective. You have the Federal Reserve. Their balance sheet is comprised of owning U.S. Treasuries, which pay a coupon and return principal upon maturity, and they own mortgage-backed securities. And I'm sure there's a host of some other things that are on their balance sheet as well. But those are assets that generate cash flow, okay? They print money for nothing. They are basically sanctioned, government-sanctioned counterfeiters. If you counterfeited currency, they'd lock you up and throw away the key. But they are allowed to print money. It costs them nothing. And then they go out and they buy real assets with it that generates cash flow. Some of those assets, again, are U.S. Treasuries. Well, where does the U.S. Treasury get their money from? Oh, that's right, you and me, our tax dollars. So let's get this straight. The Federal Reserve gets to print money out of thin air, buy real assets, U.S. Treasuries that generate cash flow, and the Treasury gets that money from the taxpayer, and then they have to pay back the Federal Reserve? Who are you working for? Sounds like you're working for the Federal Reserve. You see why I'm telling you got to end the Fed? You see why I'm telling you got to abolish the income tax? Starve the beast. Starve the beast. You know, one of the things that I have to agree with a lot of the Democrats is we got to get rid of the lobbying in this country is outrageous. The amount of control that corporations have over our politicians is ridiculous. Now, of course, their solutions are terrible. They just simply think government somehow needs to get bigger. It takes two to tango. And what we outline in our book, The Cynic's Guide to Investing, because we do a chapter on lobbying, and the numbers are staggering, and this was 4 years ago when this book came out, so they're only worse now. There's no doubt about it. You have to look, and we said, in regards to lobbying, they can't get what they don't have. And that was in relation to lobbyists going to Congress, asking for money, trying to get money. Well, if you starve the beast, and they don't have money, then what are they going there for? I mean, yeah, they might try to get some laws in their favor, but it's really the money they're after. They want subsidies, they want corporate subsidies, they want tax breaks, they want a whole host of things that is going to improve their top and bottom lines. See, and that's part of the problem here. That's why you have American companies leaving or going out of business, because the innovation is being stunted by corruption, by the good old boys club. That's the real problem here. You can point the finger at China. You can point the finger at Mexico and illegal immigrants. But that's a false choice. That's a distraction. We're to blame. This is our doing. This is our negligence. We're supposed to be vigilant. We're lazy. We're zombies walking around on our iPhones. And this is what we get. This is what we get. Now, had you not had this unholy relationship between major corporations and our federal government, you would have companies that had to innovate. But it's easier if you can say, well, you know what, we got some cash. Let's just fund a campaign. Let's send this politician and his family on vacation. Or let's give his brother-in-law a cushy job, making 6 figures, 7 figures somewhere, and he'll just do whatever we want. That's a lot cheaper than it is sitting around a table and brainstorming great ideas. and becoming more innovative. That's what happens. That's what happens. That's why we're suffering. This is all the direct consequences of everything. So I hope you're starting to connect the dots, because that's what we do here at the Capital News. Thank you so much for joining me today, ladies and gentlemen. It's been a pleasure having you. As always, please like, share, subscribe, and get the word out. This is the Capital News. I am Alex Koritis. Godspeed.